Hey guys, welcome back to the channel. So today I'm going to be covering a lot of topics and I want to jump right into it. I want to make this video short, sweet, and to the point with as much information as I can. So I'm going to be covering coronavirus stocks, the whole market tanking, how it's been going down for the past few days, how we've pretty much lost all of our 2020 gains in literally the past week. Ways to protect your portfolio, protect your money, and not get wiped out. I've seen a lot of videos out there where people teach you how to invest in the market, but they don't teach you how to protect yourself from times like this. I'm not saying we're in a recession or we're in a bear market, but it's important to be prepared for when that time comes. So here I have a chart of the SPY, which is the ETF which tracks the S&P 500. And as you can see, from all-time highs, we're only down about between 12 to 13%. We're not even down that much. You guys have to keep in mind, the stock market isn't the economy. If you want to track the economy, you do that through GDP, which is gross domestic product. And the only time to be concerned is if we have 2 consecutive quarters where our GDP is declining, that would be considered that we're near a recession. If we have 4 consecutive quarters where our GDP is declining, that would be considered a depression. But right now, guys, we're not even down 20% from all-time highs. So in my opinion, there's not much to worry about yet. Okay, so let's talk about the short term. What are investors doing? What are traders doing? So smart long-term investors who are in this for the long run are basically what's called buying the dip. They're buying all of these stocks, they're buying the market at a discounted price. And then we have the traders, the swing traders, the day traders, the ones who are taking opportunity of the volatility that's going on in the market at the moment. So if you look at my charts here, these are example of coronavirus stocks that have been going up in the past few weeks. Ever since the news started coming out of all this virus breakout and stuff. And the reason traders play these stocks is because they're short term. They're not long-term investments. These aren't actual companies that are consistently profitable. These are just companies that are trying to make money either through news or press releases regarding vaccines or cures or potential cures for the coronavirus. If you look at all these coronavirus stocks and how relevant they were before the coronavirus, you can see they had no action whatsoever. Nothing going on here, nothing, and more nothing. Again, the reason these companies are up is due to press releases or news that has come out and benefited their stock. Now, there are a lot of companies out there that have nothing to do with a vaccine for this virus, but they are stocks that I would keep an eye on. For example, Clorox would be one of them. They've actually been kind of going up a little bit these past few days. 3M would be another company. I believe they just got a contract with the government to start producing more face masks. That's going to be benefiting 3M big time. Them having to produce more masks means more sales for them. So how to protect yourself? So let's say the market keeps dropping. What are some things you can do to hedge your portfolio? Hedging is basically just reducing your risk. So first we have gold. And I actually have a chart pulled up here of what gold's been doing for the past 2 to 3 years. And lately it's been taking off. Gold is what's considered a safe haven. A safe haven is basically an investment that you expect to either hold its value or continue to go up in value. As you know, when the economy drops, the US dollar drops, and when the US dollar drops, gold goes up. Which is why a lot of investors get into gold when they see a potential recession coming. It's a good way to, like I said earlier, hedge your portfolio. Another way of protecting yourself is through bonds. When stocks go down, bonds typically go up. Here I have UBT, TMF is also another one. But bonds are another great way to hedge your portfolio. Now, if you're a day trader or a swing trader, you can also be taking opportunity of everything that's going on. A lot of day traders are taking advantage of all these coronavirus stocks and making some really good money off of the short-term plays. They're basically taking advantage of all this volatility that's been going on due to coronavirus news. Even though these coronavirus stocks are pretty high risk to play, there are some safer alternatives out there. For example, let me pull up 2 charts here. So up top, I have a chart of the SPY, the S&P 500, and at the bottom, I have a chart of the TVIX. The VIX is basically a volatility index. I like to think of it as an inverse of the SPY. If you look at the SPY, goes up, and while the SPY goes up, the TVIX goes down. But if you look at these past few days, while the SPY's been dropping, the TVIX has been going up. So just to kind of recap everything, guys, in the short term, what can you do? Investors can purchase stocks at a discounted price. You can get them a lot cheaper due to this huge drop that has happened these past few days. If you're looking to protect your portfolio, you can look into gold. If you're a trader, you can take advantage of these coronavirus plays. You can take advantage of the overall market. So whether that's going long on the TVIX while the SPY is going down, or whether it's shorting the SPY through put options. Now looking at the long term, all of this doesn't really matter. As I've mentioned before, if you're someone investing long term, you're holding this for several years. If we look at the SPY chart and we go back to a few months ago, when we had all of this news of trade wars going on, look what happened after. We bounced and we created all-time highs. I think the same is going to happen here. Once some positive news comes out, once there's a cure, we're going to bounce. But for the long term, this is a great opportunity for investors to just buy in more, add to their positions. I did want to add one last thing regarding investing. Do not invest if that's money that you're going to need in the next 3 to 5 years. Investing is money that's meant to not be touched for a long period of time. The reason all of this doesn't matter to long-term investors is 20 years from now, we're going to be back to all-time highs. Whether there's a recession or a depression, the stock market will always recover eventually. Only invest money that you know you're not going to be touching for the next 3 to 5 years. If you're going to be purchasing a house next year, put that money in a savings account. Because let's say we do have a recession in the following months to come, and your house money was sitting in the stock market. Now that money's going to be gone. So I just wanted to throw that out there so people know they can keep their money protected if they need it. So I'm going to be wrapping up the video here, guys. Just remember, protect your money, protect your assets, start hedging your portfolio. If you need cash in the next 2 to 5 years, don't put that money into investments. Everything you see on the news is just headlines, guys. People who are scared and uneducated are pretty much just selling their positions during this time, while others are taking advantage of this opportunity and adding to their portfolio. But with that being said, guys, I'm going to end the video here, and I'll see you in the next video.